Hi, I'm Jeff Brady with Roundtree Brady Insurance here in Savannah, Georgia.
What makes insuring a home in Savannah different from other parts of Georgia?
Well, Savannah, proximity to coast, first off. Obviously, the ocean's just to our east. And the fact is that if you're in the southeast, whether it's Georgia or anywhere else, we deal with hurricanes, right? We've had a pretty rough last few years, 2024 with Helene, but that's going to be one of the biggest challenges that we face. With that, most companies, not only is it going to be pricing, it can be more expensive here versus Macon or Atlanta, but you're also dealing with percentage-based deductibles. So that means it's a percentage of your coverage. It's not a percentage of the claim. That's a big question that we often get. And I think it's really important to understand that if you've got a $300,000 house and somebody gives you a 5% deductible, that's a $15,000 deductible. And it's not like health insurance where you meet it, halfway through the year and then you're done. It's every time you have a claim. And so that's kind of the big thing. Other than that, you're still going to have the same coverages under a policy. It's just more of whether or not are they going to include wind. That can happen. We've seen that happen where somebody excludes wind coverage altogether. And then the deductible is really the big piece of that.
What are the biggest factors currently driving home insurance cost in Savannah?
If you're buying insurance here in Savannah, and there's big things that can drive what your rates are. Obviously, if you're out on Tybee, for example, you're going to pay more versus, say, being in an older home. Older properties have old systems in them, and so those systems, whether it's pipes, old electrical, that causes potential claim issues. You're going to pay more in that situation. Occupancy, so if you're looking at a short-term vacation rental versus an owner-occupied, that can make a big difference. But new homes are great simply because they have new systems in them. It's a new roof, new HVAC, new plumbing, so they're going to be definitely cheaper, but you're still going to end up paying more because of where we are, and that's going to drive a lot of it. Credit's huge. Individual claim history. We don't necessarily look at the house itself, but we're looking at the individual. So that buyer, they're going to be the ones that have control over what they're putting in, and they need to be aware of that, because a lot of companies, if you've had a claim in the last, say, 3 years, you may not be eligible.
When should a buyer start shopping for homeowners insurance?
Yeah, no, it's a great question, because if you're going to have a mortgage, that lender is going to do that good faith estimate, right? And one of the things they're going to include is they're going to include your insurance on there. They're guessing. They really are. I have these conversations with our lender partners all the time. They'll call me and say, hey, what's a $400,000 house going to cost? Well, it depends on a lot of factors, as we talked about. And so when we're going through that, I want people to get ahead of it. Even I've done quotes before people go under contract, because you don't want to go down the line of paying for home inspection or these other things and then come to find out that maybe the insurance costs are going to be too much. So, to me, it is at the latest you want to go ahead and get it done during due diligence. To me, is extremely important, because you get surprises, right? You get down to the wire and then somebody's dragged their feet, come to find out they've had a claim, or they've had other situations come up. Now they're scrambling. Maybe their credit is not as strong as they thought it should be. They can get the mortgage, but it doesn't mean it's not influencing their rate. They think, here's the best one. They call their current provider. They think, I'm just going to use company X. They call their current provider, come to find out they're not even writing insurance in Savannah right now. That's real. And then now they're scrambling because they think that I've been with so-and-so for 20 years and now I can get insurance, and then they can't. And so now they're having to change. Maybe they have to change their car insurance because of it. Maybe they have to do these extra steps. It's all eligibility. That's how tight it's got.
What does a standard homeowners insurance policy typically cover?
The standard home policy, the only difference you're going to find in Savannah and coastal Georgia versus inland is deductible. So you're still going to have your coverage for your house, for your contents. It's going to give you additional living expenses, so if you have to move out because of a claim, it'll pay for you to live somewhere else. You've got your liability, other structures, depends on the company what they call it. So detached structures, so if you have a detached garage, a fence, what else could it be? Let's say you're out, in more rural area and you've got a barn. Any of those sorts of things, it's going to give you an added layer of protection there. You have your liability, your guest medical. Those are the kind of standard coverages, but then you get, there's other things in there, fire department surcharge or heaven forbid you have a fire and the fire trucks have to drive up into your grass, and they'll actually pay to resod the yard. I mean, there's all kind of little things like that, but the big stuff is house contents, that sort of thing.
What does a standard homeowner's policy not cover that surprises buyers?
Wear and tear. Insurance covers sudden and accidental loss, right? The drip claims, as we call them. Somebody's not paying attention, they don't maintain their home, and then next thing you know, they find rot because water has gotten in. I mean, it's not sudden and accidental. So they end up, people get mad, they get upset, they think they have insurance, so it just covers everything, but they don't educate themselves on the fact that, it's not a maintenance policy. If your roof's old, it's time to put a new roof on. It's not because they don't pay to put a new roof on because it's old, or your HVAC unit's old. That sort of stuff. If it gets hit by lightning, you have a windstorm, those are sudden and accidental. But wear and tear, rot, that sort of stuff, those are the big things that we see constantly from people. The hidden ones are the ones that are the toughest. Why didn't something happens and next thing you know, they're like, I've got this wet spot here, get behind the sheetrock, it's rotted out, it's been going on for years, and they just didn't know. It's hard to identify those sorts of things. It's sudden when they find it, but it's been ongoing, and insurers basically look at that as a maintenance issue.
Do buyers in Savannah typically need separate flood insurance?
Yeah, so if you're buying, anywhere, whether you're in Savannah, coastal Georgia, if you're buying insurance here, there may be a company out there that actually includes flood. I've seen that on manufactured homes, for example, randomly enough. But as far as your typical home insurance, if you're buying in Savannah, flood insurance is totally separate. You need a separate policy for it, and it's not going to be covered under your home policy. If you drive around in a spring storm and you can see whether you're in Midtown or other areas where you get the kind of it's not coastal flooding, but it's really more of your heavy rainstorm, you get street flooding, that sort of stuff. Nationally, 40% of flood claims, flooded structures are in X-flood zones. And an X-flood zone is in an area where you're not required to carry flood insurance. And I think too many people think that just because you're not in a special flood hazard area means that you can't flood. Well, we've seen it. If we look back to Hurricane Debbie in 2024, the areas in Richmond Hill that were impacted, along the Ogeechee River, a lot of those areas, people don't think about that. We've had hurricanes where we get coastal surge, and whether you're on the island, so Wilmington, Skidaway, Burnside, some of those areas, just a flood zone can mean 1 inch of ground difference in the elevation. That's, the difference between being required and not. There's no wall in between the zones. So typically, if you're in a lower risk property, you're going to pay lower premiums. And that's the best way to protect yourself. If you're worried about hurricanes, if you're worried about that coastal surge, then having your home insurance and having flood insurance is the best combination.
How are hurricane or windstorm deductibles calculated?
Yeah, so that percentage base we talked about, that's going to be a percentage of your coverage. So, if you've got a $200,000 house, a $500,000 house, whatever it may be, if you see a percentage deductible, whether it's a wind and hail deductible, a named storm deductible, it could be a hurricane duration deductible, it depends on the insurer. But when you see a percentage, it is a percentage of coverage. Simple math. So $400,000 house, 2% deductible, it's $8,000. So in some cases, if it is a wind and hail deductible, it could be any wind loss. It could be hurricane, tropical storm, cold front that pushes through in the spring when we start heating up and get that cold air and it gets very volatile, hailstorms, that sort of thing. Again, depending on the policy, depending on the company. Now, if it's some companies, it's only if there's a hurricane watch or warning that's been raised. Some companies, if the National Hurricane Center names it, right? And so depending on which one, you have to understand exactly what your responsibility is if there is a loss and when it's triggered, because it's not a standard thing across all companies. So now we actually, in Chatham County, in the last 2 weeks, we actually got a new policy where ours is 1% at a minimum that we can write in Chatham County, which is, for me, is extremely exciting because most companies want to go to 2. So that means that we can give a lower deductible. So, that's the biggest complaint people have is they have damage, but because of the coverage amount, now they have a 10, 15, heaven forbid, higher percent, $10, $15, $20,000 deductible. Well, now at 1%, if it's a $500,000 home, it's only $5,000, not 10, and that's huge. And it's also replacement cost coverage. There's no roof schedule, anything along those lines. We're not depreciating the roof. That's a beautiful thing about it, which we're excited about having that for our clients moving forward.